Want to know how you can gain access to capital to jumpstart your journey to entrepreneurial success? For entrepreneurs who are just starting out or those who have been in business for years, Minority Business Access is your podcast. Welcome to our show, where we will guide you in avoiding the pitfalls and thriving in your chosen business. Now, onto the show with your host, Solomon Ali.
Ladies and gentlemen, thank you so much for stopping by. Today, I'm excited to sit down and speak with Solomon R.C. Ali and find out about some of the stuff that he's been doing. So just a quick background, Solomon R.C. Ali's company has arranged more than $250 million in structured investment capital and financing for a diverse portfolio of companies, including NDR Energy Group, one of the largest minority-owned companies in the United States. And so we're going to dive deeper into that. And one of the things that we hope that you guys take away from today's interview is what's available for minorities, right? And so I'm excited to dive into this and get his perspective. Solomon R.C. Ali, welcome to the show.
Oh, thank you, Bert, so much for having me. It's a pleasure.
So I want to ask you, as with your experience, your background, let me rephrase it, has it been difficult for minority-owned companies to get a fair shake?
Well, the answer to that is simple. It has been very difficult. Minorities have a very challenging time getting access to capital. And that is the difficult part, is that you need access to capital. And we don't tend to get the same access to capital that other companies get. And so that makes it difficult.
So let's talk about that. What are some of the challenges that we face as minorities trying to get capital?
Well, one, we lack the network. We typically don't have the network to actually pull around us to help us. And then also in that same network, or a version of that network, we don't have the people that we can reach out to that may know someone that says, oh, I know Bob, he's in private equity. He may be able to look at and point you in the right direction. So we typically don't have exposure to that type of help and access. And that's why Solomon R.C. Ali Corporation that we funded tries to help minorities and everyone do that, where we arrange capital for companies and help them to restructure their businesses. So we like to take them public or see that they go public so they can have access to capital that way.
All right, so give us a little bit of your background. How did you get into this niche market of helping companies grab capital?
Through failures. Through a lot of failures. I started many companies, and in starting these various companies, most of them were unsuccessful. Only a handful of them were extremely successful. But the thing that I learned, that in each and every endeavor, I needed to actually go out and raise capital. And then most of the time I had to bootstrap it even after I raised capital, because I was never able to raise a significant amount of capital or what I actually needed. And a lot of people will say, well, you were very lucky because I could go to the bank, like a bank of Wells Fargo or B of A or something like that, and I could raise $1 million through the bank in debt financing. But people didn't understand what went into that. And so what goes into something like debt financing is, look, you have to bring 3 years of personal financials, 3 years of business financials, and then you have to bring a pro forma. And so they're looking at that, hey, can you debt service with your existing business 1.25? Can you cash flow? Take care of all your current responsibilities plus the new debt is typically what they're looking for. And that's really hard and challenging for minorities to do, especially in a startup stage.
Sure. And I would add that's difficult for a lot of companies to do, but I think you're absolutely right. I mean, if you look at a minority company that maybe doesn't have, like you mentioned earlier, the network, because it really is about who you know and who knows you. And I talk about this all the time. You look at a company like, let's say Uber or Lyft. They have minimal assets, really no assets in a capital type of environment. They haven't made a profit as of yet. You know, their sales are questionable. They're being, you know, because of the what do you call it? All the different things that they're trying to do, or all the different things that they're trying to circumvent. They've had a plethora of lawsuits. California has just come down and said, hey, if you're a full-time driver for Lyft or Uber or Postmate or any of these companies, they got to treat you like an employee. And so that may actually get them out of California completely. But what is amazing to me, back to what you said about the network, because these guys have the network, they're able to raise literally millions of dollars that most of us only dream about because they have that network.
Exactly. You know, one of the companies I use when I'm speaking is Amazon. When you think about Amazon, the CEO said for the longest, and it was about 15 years, 14 and a half to 15 years, hey, we're not profitable. I don't know when we're going to be profitable, but the company still stayed in business. And how do you become a company that's not profitable and stay in business for 14 and a half years? Most companies would have had to file bankruptcy, go out of business. But here it is now, because they had access to capital. They are the leading company, not just in the United States, but perhaps in the whole world. And so that's kind of phenomenal. And that's what I would like to try to help to bring to minorities, and you know, not just minorities, but people who pretty much look like me, or people who had to start where I started to bootstrap a company together, because it's difficult and it's a lot of different challenges. Once you get through some of the financing, a lot of people think, oh, wow, okay, I got the financing I need. Well, it only takes a handful of mistakes to realize, oh, you need more financing. Or if everything goes really well, you realize, oh, your business is scaling and doing terrific. And then all of a sudden you go to the bank and you think they'll be happy for you and give you some more money. And they're like, no, you're growing too fast. So it always changes.
Yeah, no, that's amazing. And you're absolutely right. And this is where, again, having that what do you call it? That management team that has a background like yours or has a network like yours can make the difference, because I think that's a really valid point. Amazon, who's, like you said, has not been profitable for most of its existence, but yet they're able to tap into capital. And I think also one of the reasons that they haven't been profitable is because they're constantly looking at an acquisition here, acquisition there. So that might, what do you call it? On paper anyway, make them look less profitable. But bottom line is, what you said is true. Most companies can't go 5, 10, 15 years without making a profit and still have access to capital without, again, without the connection. So let's talk about this. What is the process? What is the method of raising capital that has worked so well for you and your companies?
Well, the technique that we use is this. First, we look for companies where the management team, starting with the CEO, has a good track record. We look at their past performance and we look at, okay, you're thinking about scaling your company, whether that's going to scale organically or through acquisitions. Can they do it? Because it's one thing to manage what you have. It's another thing to take on multiple locations and then begin to cross state lines and try to manage all of that. It reminds me of an experience that I had when I was in the nursing home business. When I went from California to Oregon and to Texas, the insurance agent came and told me, well, it's going to cost you this in Texas and it's going to cost you this in Oregon. I was like, well, why can't it just be on the same policy? And he was like, it doesn't work that way. And so we had hundreds and hundreds of employees. And then next thing I know, my attorney comes and tells me, he says, hey, you have to have a checking account in each of those states for payroll. And I was like, you guys got to be kidding. And so we don't know those things as sometimes entrepreneurs. We start growing our business and developing it, and it just gets really difficult in doing so. So a good management team that understands what it is that's before them, they got to be willing to reinvest the money in the company to create value. I like to equate it to when you build a house, you go buy a piece of raw land, right? You get the land, and then you have to put the house on top of the land and build it to create more value, to create more equity. The next thing, you got to understand the industry that you're in. What is that industry doing? And why is that industry doing it? Okay, is that industry going to grow? How is it going to grow? And then the last thing is, what's the capabilities of their company? Can their company, most professionals like their companies to grow by double digits. If you come to Solomon R.C. Ali Corporation, or you listen to my podcast, MBA, what we're going to tell you is we want to see your company having the ability to grow by triple digits, because that's very important. And that's kind of our way of sandbagging. And that's how we're able to get you access to capital. And then last, we just kind of look at your competition. What are the top 5 companies doing? What are you going to bring to the table that's unique, that's different, that the other top 5 companies within that industry is not doing? And how do you measure up? And as far as management, how do you measure up as far as the performance that you've actually put together? And so we kind of act like that old school teacher, right? We're just trying to give you a grade. And it's not a pass or fail grade. We just want to know where you are. And then our team comes in and help put a strategy together to tighten it all up to make sure it actually work. And so, anyone that ever listened to my podcast, when we're talking at MBA, we talk about these different things so that you can avoid these minefields.
Yeah, and I want to again go through them real quick. So obviously, good management is a no-brainer. The ability to build value, and this is so important because a lot of managers know how to build value to a point, and then after that, they lose steam. Understanding the industry, and this is so vitally important, being able to look at the landscape and see what's happening. One of the companies that I use all the time as an example is Blockbuster. Here's Blockbuster, 4, maybe 5,000 stores. I forgot how big they got. I know it's around 4,000 stores or more. They're the leader in their industry, but yet they failed to understand what was happening, and they're gone. I mean, it's amazing. Here's a multi-billion-dollar company, thousands of employees, thousands of stores gone.
It's funny that you use Blockbuster because they also had a chance and opportunity to buy Netflix, and they passed on.
Yes.
And it was like
2 or 3 times.
Yeah, it's like, what are you guys doing? But when management has a tendency sometimes to get complacent and believe,
yes,
hey, it's been working this way, we don't have to change things. And they're no longer in touch with what's going on within their industry, what the marketplace actually wants. And so that's kind of where we come in. When we do all our due diligence and everything and our research, we're not just researching and looking at the company itself. How does that company fit in the industry? What problem does that company solve for mankind? And those are very, very critical things. And if management can't execute, then that becomes the thing that says, well, maybe you're not ready, because we can give you a good plan, but you still got to execute the plan.
Absolutely. Back to capability. And then again, this is another one that a lot of people gloss over, and that's that competitive edge. How do you separate yourself from everybody else out there? Because I don't know anybody who operates in a vacuum. You're going to have some type of competition, and you have to be able to say, I'm different because of this. I always, again, one of my favorite industries to look at is like the pizza industry. So you have Papa John's, who they were trying to differentiate themselves by saying, hey, better ingredients, better pizza. Not a great slogan, but at least they're trying to come up with something. And then you look at the personal injury attorney industry, where there aren't too many standouts. It's one attorney can be easily replaced by another attorney because they sound the same, they look the same, their commercials look the same, their branding looks the same. There is no competitive advantage. It's just whatever attorney that maybe the consumer happened to watch on TV or on YouTube at that moment. Maybe that's who they're going to call. So I guess that's their strategy. But these 5 areas really is a perfect way for anybody listening to today's show or watching whatever to write these down and see how they stack up, because maybe you're in the startup mode and they're not ready for you and your services. But either way, if they want their company to scale and survive, they really have to be proficient in all these areas.
Yes, they do. One of the things, like anyone that's in the startup mode, the first thing I would tell them is, look, go buy a business. Don't start it from scratch. Find the closest business that does what it is that you want to do, and do that. Buy it, and then add a different subsidiary to it, and then develop out what it is that you want. And that'll save you a lot of money in the long run, and it'll give you a good solid foundation as you're trying to grow. Otherwise, what you're going to do is a complete startup, realize you're going to spend way more money trying to figure things out without that infrastructure. The people that's already in business, most CEOs and their management team, they come and they say, look, I need $5 million. I say, okay, great. What do you need it for? And they think the money will solve all their problems. And so they sit in front of me and my team, a whole bunch of forecasts, and they tell us how great everything is and everything. And I said, well, what is your competition doing? Well, why are you worried about the competition? What do you mean why I'm worried about the competition? Because either you got to go out and educate the consumer and get more market share that way, or you got to take market share from your competition. And if you don't understand what it is that your competition does extremely well and what they do poorly, you're not going to be able to compete with them. And so you're asking for money, thinking money will solve your problem. Money will not solve your problem until you understand what it is, your problem, what the problem actually is. And so it's different. They get away.
It is. And I want to point out, there's a company that just closed called Quibi. Is it Quibi? Quibi. And I believe that's how you pronounce it. Maybe it's Quibi. Anyway, so it was short for quick bites. And so here's a company that raised over $2 billion. Their management team was David Katzenberger, Disney fame. He was also involved with Steven Spielberg in DreamWorks. Then they had, I believe, Meg Whitman, who was the CEO of Hewlett Packard. Before that, she did really well with eBay. So they have a fairly good management team, tons of capital. I mean, it just raised $2 billion out of the gate. And because they did not understand their market, they didn't understand the challenges. I think they lasted 6 months. I might have been 9 months, but it wasn't even a full year. And it's like most people, when I say most people, most entrepreneurs would love to be able to have a management team with that level of experience and network raise $2 billion. And this goes back to your point. Money isn't going to solve your problem if you don't know what the industry is that you're in, if you don't know what the competition is, if you don't know how you're going to compete against your competition. And so they were trying to compete with Hulu and Netflix and all these other streaming services. And they had a niche idea, which is, most people watch videos on their phones. And so they were basically tailoring their product, their streaming to the phone. And they were doing it in like 5 minutes and 10-minute increments. And they had spent, I believe, something like $500 million just acquiring content, making new movies. And they had some top talent there too. They had Will Smith. They had purchased some other series. They failed. because they did not really truly understand what their market. They didn't know how to compete.
You understand what it is that you're doing within the industry. And then you have to understand the company itself. You know, people ask, what's one of the first things when you put a new company together and you're going to go do something? I say a great management team is the first thing we look for. Second thing, I'm looking for a great board of directors, because the board of directors is going to bring you access to other things that you're going to need. It may be attorneys in a particular area, accounting people in a particular area, marketing people, industry knowledge, things of that nature. But they're going to be able to make a phone call typically to get you a hand. I'm going to say a handout, say it that way. And a lot of times management companies and their team, they just don't have that. And they go in and they start trying to execute and they forget, even if they've been successful in the past, they forget what the grind looks like, how well you have to understand your competition in the business, because managing personnel is really, really difficult because they're humans. And so you can't just sit back and say, oh, wow, I can manage these guys the same way we managed before in the past. Well, if it's a different group of guys, one, you got to understand those guys first and see what it is that make that particular culture go. You know, a lot of acquisitions. I've been involved in over about 200 acquisitions now. And a lot of times it's finding what blends the culture together. And that's really, really difficult. We buy businesses and the businesses have been failing, but everyone's happy when it was failing and it's about to go out of business and they're about to be out of job, but they were all stoked about that. And we come in and save it and they hate me. And I'm like, what in the world's going on here? And I had to learn in my early days. I had to learn. It's not about how much money you can throw at a problem. It's about how you treat the culture, fitting in the culture, blending in well with them, getting them to trust you, and letting them know that you can trust them and vice versa in what they're doing, and listening and hearing their problems. And that's really tough to do. So one of the things that we do at Solomon R.C. Ali Corporation, we go through the ABCs. A is we arrange the capital. B, we help to build and create the wealth for them and the structure and everything of that nature. And then C, we can sow strategically on what's happening within their industry. And a lot of them will tell us, oh, no, we know our industry and everything of that nature. 9 out of 10 times, we know their industry better than they do when we're done. We know and they would come back and say, well, I didn't know that. I didn't know they were doing this. And it was like, okay, well, it wasn't like they were hiding it.
But you know, one of the things, one of the things I've learned from Shark Tank, I think Shark Tank, if you're an entrepreneur, you need to watch Shark Tank, and primarily what I've learned from Shark Tank, back to your point, is how little people really understand their business, their competition, or their numbers. Yeah. When you look at the deals that the investors, the sharks, are interested in Shark Tank, it's because those individuals do understand their numbers. They understand what their competition is doing. They can tell the sharks, this is how we're different, and they have a specific reason. We need capital for this. And as opposed to the deals that they're not interested in, it's because those people come in, kind of, again, back to what you said about, we need money to keep our business afloat, but they don't know their numbers. They don't know anything about their marketing, what it costs to acquire a consumer or a customer. They don't know what's happening in their industry. And those are the deals that are quickly, passed on. Right. And it's so vitally important. I come across people just like you're talking about, that they have this very small understanding of their business, but they don't understand the basics. To use your ABC analogy, they don't know any of the basics. Again, the cost of acquisition, the lifetime value of a customer, things of that nature. I do want to ask you this. There is an experience that you had where you created smart home technology, and I believe you were able to get companies like Amazon and Skybell to license this. Talk about this.
Well, I didn't create the technology. I am brought in as a board member and as an officer of the company. The original CEO of the company created and founded the company that created the technology. Basically, I arranged all the capital and I just had a different dream. He wanted to, and here's where a lot of CEOs do. I said, the barrier to entry and just building the Rolls Royce of a camera, competing with the big companies out there is too great. Let someone else do that. We can take our technology, our intellectual property, and we can go and license it. And so after about 6 or 7 years of us going back and forth, we finally decide to license. When we decide to license our intellectual property, the first thing everyone told us, including our own shareholders, was this: you guys are crazy, that's never going to work, it's gonna take you 5, 7 years, and you just killed our stock and everything like that. Well, in the first 5 companies we took to litigation, in 120 days we had all settled. Wow. Now, we didn't settle for the kind of monies we wanted to, but that was the first 5. And so that began the ball rolling. And so Jamie, the CEO of Ring, who was actually on Shark Tank.
Yes, he was.
But he didn't get a deal on Shark Tank at that time, I believe, because we held the intellectual property. So no one's going to fund your company and someone else over there can come back and sue you. But he ended up coming to us. Licensing was one of the first really big licenses, I would say, that we got. Then we got Skybell, CPI, Heathco, a bunch of other companies and everything. And so that's kind of how all the licensing and everything. So anything dealing with a two-way audio video that goes or gets downloaded to a smart device, whether it's the pad at the house, computer, your phone, or things of that nature. Yes, that's our technology, and we're the ones that license all that out.
And that's awesome. And this is a great point that I want to emphasize, and that is this what do you call it? Different point of view, different way of thinking, the strategic idea that, hey, you have this IP, this intellectual property, let's license it. Listening to you reminded me of Kodak. At one point, Kodak owned all of the patents for digital photography, and they did nothing with it because they were afraid it was going to take away from their film business, which it did anyway, but they didn't make any money off of it. In fact, the last big thing I heard from Kodak is they got a bunch of money because they might have a vaccine for COVID. I'm going, what? How does that happen? Hey, we're not making any money off film or digital. Let's start getting in the vaccine industry. But anyway, this is so important because you probably dealt with this. Inventors are some of the hardest people I've ever dealt with because they're so myopic. They only have this little vision. And when you start talking about licensing, it's my baby. I don't want to license it. I want to own it all.
Exactly.
And that's what I call the Daffy Duck mentality. I saw it first. I want it all, and I don't want to share it. And then most inventors are broke. Yeah, they got great ideas, they got great patents, but they can't manage. They couldn't market their way out of a paper bag because of the way they think. And you need somebody like yourself to say, hey, let's do this. Let's license that. Here's are some of the things that we can do. And so my point being for everybody on the show today is sometimes you have to have a different point of view to get to the same goal, because the goal ultimately is to make a profit. And if you're not in it to make a profit, and as you mentioned, change the lives of other people, help your consumer, then you need to go get a job. You need to go find something else to do.
Right. It's like what you're saying. You could be the inventor of something, and your vision is, yes, you want to see it come to market, but you may not be the one that can take it to the marketplace. You may be the person that's going to have to license that technology to someone else and allow them to take it to the marketplace because their superpower or their genius may be in the marketing or the distributing of that And a lot of them don't understand the resources that it takes that goes in it. See, you're dealing with an inventor. Yes, you built this really great thing. It's phenomenal, okay? But now when money looks at it, money's like, well, can that person build a manufacturing plant or go ahead and oversee the project of it being manufactured and everything of that nature? Can they handle the distribution of that? And all that costs money. And it's not that suing people don't cost money, because every time we take someone to court, all right, we're looking at about $1 million. And there's no guarantees that we're going to win. And if we lose, we just lost $1 million plus right off the bat. And a lot of times people partner with, especially the inventors, they partner with or say, oh no, we're going to do this, or we're going to try to do this. And not realizing how expensive it is to hire a firm to actually take that to court and represent you. And so we try to make it a little bit more frugal at Solomon R.C. Ali Corporation. We deal with our own patent form that we have developed to work with other entrepreneurs and patent inventors and everything of that nature. We work with some of the really, really large ones. But in working with them, we have our sweet spot, we call it. So we deal with things that we know that may be 300 or 400 million, where, hey, if we're going to have to go to court, we're going to spend 5 to 6 million in going to court and helping them to defend it. Okay, because we use our attorneys, we use our engineers, we use our writers and everything of that nature. And most of the time, they don't know they need all that. So you don't just have to have the attorneys, you have to have engineers, and you have to go again, look at the whole industry, what's out there, what's been, what came before you, what's coming down the pipe now. And one of the things we were successful to do at iTalk 365 was this. We kept creating bridges. And every time we created a bridge, it created a toll road. So people had to come across that toll road. And then as we kept going, then more and more, some people couldn't pay us the money, they had to give us their patents. So now our patent portfolio grew very quickly. And so that became very exciting to us, and being able to actually do that.
Yeah, absolutely. You know, and again, this is where having an expert help you maneuver through this process, because you know, licensing is a totally different business. What do you call it? Intellectual properties is a different business. There are so many things that you can do if you partner with the right person. I want to ask you this. We just got through what a lot of people call one of the worst years ever, 2020. And you mentioned that buying a business is one of your favorite things to do. My opinion, and I want to get your feedback, is here we are, 2021, January 12th, 2021. I think this year is going to be a great year for acquisitions, because so many companies are open to being acquired, to partnering up, to maybe licensing their IPO, their IP. What do you think about 2021?
Well, 2021 is going to be an awesome year. 2020 was an awesome year for a lot of us who understood what was happening in the marketplace. What I think is people have to, if you're going to be an entrepreneur or you're going to be in business, first you have to go back and read history. You need to go back and understand some history. What's happened in the economy in the past when we had down markets and things were just going really bad, okay? That creates a lot of opportunity. Someone, basically, their business is struggling, so they need someone that can arrange capital, or a partner that has capital that can help them to go through those lean times. And that's what we do, is help companies to go through those lean times. So anyone that's listening or hearing, if they want help, we can help them, and we can match them up with the partners that they need. Go to solomonrcali.info, and we'll help find you the right partner. Now, what does that partner look like? It may be someone already in your industry that you need to partner with, that they have a better logistics. and they have a better infrastructure, but you might actually have a better product or service, okay? And so when you partner, we can get rid of some of the duplications and everything of that nature, and we develop a much stronger management team that can execute based on what strengths they actually have. And now when you fuel that with the right capitalization, now you have a recipe of success, okay?
Yeah, I love that. I love that. And again, this is one of those things where you have to, when I say you, meaning the entrepreneur, the CEO, sometimes has to humble themselves and say, I need help. In order to get from where I'm at to get to the next level, I'm gonna need help. I got to get different people working with me, or on my business. And it really, I think that really separates the individuals. Most successful individuals I know are people who are constantly asking questions, and they're trying to find the next talent that they can acquire so their business consistently grows. One of my favorite thing about Google is that all of their employees have this 20% time, I think that's what they call it, and 20% time that they can spend on anything they want. And if it's a good project, Google will fund it, and they'll put all their resources behind it. And Google has something like 250 businesses that they have launched and closed because of that 20%. Now, if you've lost 250 businesses, you've invested in 250 losers, to use that vernacular, you only need 5 or 6 or 10
to work
to make up for all those losses. And that's what they consistently do. Google's coming out with the new intellectual property. They're coming out, they're acquiring somebody else. They acquired YouTube, whatever it was, 10 years ago. So Google is constantly looking for innovation. They're constantly looking for talent. They're constantly looking for how they can expand their horizon. And I think that's what separates them from a lot of other people.
Yeah, Bert, one of the things you said, they acquired someone. So they acquired another legal entity that had talent and intellectual property and things of that nature, or maybe just a simple infrastructure and system that was already working very well, that they could turn around and add to that and create more value. The easiest thing to do sometimes is to look and throw rocks over there and say, oh, well, no, I don't want to acquire that company. I just want to go build my own and we can do it better. No, that's going to be more challenging, folks. That's not going to be easy. That's going to be more challenging, and you're going to end up going broke most of the time. It's very rarely is an entrepreneur or a business person going to start from scratch and be able to do what companies have done in the 20s, in the 30s, 40s, and 50s, and even in the 60s. That's not available anymore. It's rare when it does happen. That's the unicorn when it does happen. However, it's much easier. It's a lot time saved if you just go acquire the company and be done with it, change and tweak everything just a little bit, and then make sure it's well capitalized. You got the right people there, and then let it rip.
Yeah, I love it. I love it. I love it. So if people wanted to find out more about your company, they go to solomonrcali.info.
Yes, go to solomonrcali.info, or they can go to our podcast, Minority Business Access. It's not just for minorities. A lot of people call my people and say, hey, I thought it was for minorities. No, it's for everyone. It's anyone who wants to bootstrap their business and kind of figure out how to do it and avoid minefields. So what I try to help people understand is, look, it took me 34 years to figure this all out. So you don't have to do that. You don't have to stumble, bumble, and fall and then become successful. You can just go straight to being successful if you want to do the work. But it is a lot.
Yeah. Yeah. No, and you know what? And I love your point that, if you're going to start from scratch, it's a lot of work. And there's an 80% chance of failure. And if you acquire a good business with good talent, it's still a lot of work, no matter what.
Exactly.
There is no shortcut. There's no hack. There's no easy street. It's all a lot of hard work. I guarantee you that Jeff Bezos is putting in as many hours today as he was 20 years ago, but now he does it maybe out of passion, but it's still a lot of work. Solomon, I want to say thank you so much for stopping by. Looking forward to catching up with you again, my friend.
Bert, thank you so much for having me.
You've reached the end of another episode of the Minority Business Access Podcast. Connect with us at solomonrcali.info to leave a review and access more resources. We hope you enjoyed this show and found great value. See you at the next episode.